going on, folks? Welcome to today's Growth Leaders Report. My name is Hamilton. I'm here with the Trading Initiative. It's March 4th, 2025, and we are getting the pullback that so many people have been talking about over the last couple of months that was coming, right? S&P 500 coming down and damn near tapping the 200-day moving average for the first time in quite a long time, and the NASDAQ actually trading below the 200-day moving average for the first time since going back to the August 5th breakdown last year. What we're looking at today is a list of stocks that are a combination of CAN-SLIM type fundamentals plus our technicals thrown on top. We filter them by proximity to 52-week highs, and we tend to get some stocks that look really good from both a fundamental and a technical standpoint. As you are probably aware, the market right now is not necessarily conducive with these types of stocks. And so while this list is very short today, I do think there's some value to be had because when or if the market does flip back up, these particular positions are probably going to have a better opportunity of outperforming, particularly TGTX. I'm going to go ahead and say right now that there's only 5 names on this particular report. Over the last couple of weeks, we have seen this report dwindle down in numbers. We generally have anywhere between 30 to 50 names we're looking at every single week when we run this report. As of today, we're looking at 5. 3 of those are gold miners. We already have gold miner exposure inside of TTI, so we're not going to take any or waste any of our time talking about those 2. We've opened up a large cap healthcare related position late 2 weeks ago, I think it was 2 weeks ago, Abivi, which is up near all-time highs. So we're not going to talk Eli Lilly. So we're just going to talk TGTX. It's the only name on the list right now. And then I think at the end of this, we're going to talk just some general market thoughts before we hop off here. It's going to be a quick session. TGTX, a massive stage 1 into a potential stage 2. I think this looks absolutely great if you're looking for biotech exposure, which I'm not right now, at least not yet. I think we were going to want to wait for the market to really find a floor before really committing capital to any of these breakouts or even worse, dips. Something that we talk about inside of TTL all the time is to try to buy the right side of the V. So if something is coming down, instead of just indiscriminately buying the dip, wait until there's a floor to be set and then a potential new higher high comes in before you really start allocating capital towards those areas of the markets. You might not catch the absolute bottom, but you're not going to be the dickhead buying into new lows and then having to commit more capital and more capital and more capital to stay afloat. That's a bad way to do stuff. And if this is a potential bull market top, which I have no idea if it is or it isn't, we're going to know obviously in the future, you do not want to be buying dips. That's the wrong way to go about getting out of a bull market and into a bear market. You do not want to be buying dips. So these breakouts here that we're looking at, and there are still breakouts in the market. We run our usual scans in TTI every morning, and there were lots of breakouts this morning in stocks such as Procter & Gamble, or up near 50-day highs at least. Stocks such as Johnson & Johnson, stocks such as Philip Morris or Altria, just names that we don't normally want to be holding in a bull market and names that aren't necessarily the most exciting names to trade. So it's not the type of market to go and buy these breakouts, even if they're in areas of the market that you want exposure, such as or classical exposure, at least tech, consumer discretionary, stuff like that. Those sectors are capitulating right now. They are getting destroyed right now. And so you have to ask yourself on a stock by stock basis, are the breakouts that you see in those select areas of the market going to stick? Odds are they don't. If the sector and worse industry group are coming down, the odds of those breakouts actually sticking and running are reduced dramatically. So we're looking here at a healthcare related name, which healthcare, by the way, is performing very well this year. It's a top 2 sector year to date. Pharmaceuticals, or even biotech, we'll say biotech here, also doing okay. It's not the worst performing industry group. It's not necessarily leading, but it's worth to have a conversation here in TGTX. I don't mind it, as a matter of fact. I think there's a very obvious breakout level somewhere near 36 or 36.5. You have this massive stage 1 base here going back to the middle of 2021, and I think that a new breakout here, you can target this 52-week high or more up near 56.50, and then potentially even price targets even higher than that. If we go ahead and throw this somewhere near, we'll play a 36 area breakout. You can see that the price target lines up with that previous high there. You can throw your stop right underneath fractal low. You have a PT of 56 and then up near 88.5. I do think that this is going to be a good position to own when or if the market bottoms. I just don't know when that is going to happen. And I'm only going to be buying this type of stuff, particularly speculative growth stocks, biotech stocks, in a market that is going to be conducive to that type of buying. And as of right now, it's just not there. We're just not there, right? I'm not convinced that I want to go out and buy a bunch of new high beta growth stocks, which this is, right? This is a 4.62 ADR, so this moves quite a lot, and it's very obviously a growth name in a biotech industry group. Thoughts about the market as a whole, just really briefly here. I'm not in the mode of catching knives. I don't care about buying the absolute bottom. I'm looking at the NASDAQ here, which has led to the downside over the last couple of weeks and is now down below our line in the sand at 497, taking out those July highs and below the 200-day moving average. This is a big deal for me. We have, or at least I have, now shifted tactically short, particularly focused on the leading sectors to the downside, which are technology and consumer discretionary. I'm looking for higher beta, short-term tactical shorts. Short-term meaning if I'm buying puts, I'm going no further out than April, so I'm getting like 40-something days, and realistically, I hold these shorts for a couple of days, maybe a week or two, and then I'm out. I'm looking for base hits. This is not the type of environment that I tend to look for home runs or grand slams. Bull markets, buying calls, a lot easier to hit grand slams because you have the primary trend on your backside, but when you get into these kind of messy areas where the market potentially could be topping or at the very minimum correcting, which it obviously looks like it's doing right now, you get these violent snapback rallies like we saw on Friday, which if you're caught short in those, you get wiped out. You could be short for 3 days in the massive sell-offs, and if you don't take your profit on those types of moves, the Friday will wipe you out. That's just how puts work. That's how shorts work. It's harder to short than it is to long, particularly when we're still in a primary uptrend. I know it's crazy to understand that, but if you zoom out, we're still technically in a primary uptrend. We're in a corrective phase. Totally on board with tactically being short, particularly the higher beta and worst performing areas of the market over the last couple of weeks. I'm on board with that. Do I think that this is a bear market yet? Nope, I do not. I need more information and more convincing to make that a call. But I do think being tactically short those areas and not buying the breakouts is probably the way to go for the next couple of days or weeks, depending on how long this takes. And if this does end up rolling into a steeper decline, meaning a potential bear market, if this was the bull market top, little caveat here, if this was the bull market top, three things I want to say. One, this was a terrible bull market. This was one of the shortest bull markets in history, at least going back 80 years. This was one of the worst performing bull markets of the last 80 years. And this was, and I'll say this unequivocally, the worst bubble I have ever seen. I mean, honestly, if this was a bubble, it didn't really do much. As a matter of fact, if semiconductors were the flagship group of this bubble, they barely got up and over their 2021 highs over the last 3 years. What the hell? This is not a bubble to me. Where is all the bubble? Everyone was screaming about an AI bubble. I don't see it. Just because NVIDIA went up, 1,000% doesn't mean that there's a bubble in the entire industry group, because very obviously there wasn't. So if this is the top, this was a very disappointing bull market, which is totally fine. We'll be able to play to the downside as well. Areas that I'm looking at here, the S&P 500, it's also broken our line in the sand. Line in the sand for the S&P 500 were those July 13th lows. We're up near the 200-day moving average. You can see that we were back here 2 years ago during the summertime. We actually broke through it recently. End of summer, like October-ish. I think we started to pivot somewhere near Halloween. Yeah, I remember we took the trade long on Halloween on the AMD earnings that reversed up like 5% after hours. But we're tactically short now. How long this lasts, I have no idea. We're taking base hits. We're building a relative strength watch list, as we always do in primary uptrends. The idea should still be that there is better potential return going long than short, but obviously right now, given market conditions, we have vastly slowed down the amount of positions that we're opening up long. But still building out those relative strength watch lists. As of right now, TGTX is going to be on that relative strength watch list. Later, if the market catches some sort of floor and starts to bounce, we can get back into TGTX and a bunch of other names that lead off of the bottom. But as of right now, I'm totally okay with where I'm at. I opened up JP Morgan and Bank of New York Mellon yesterday, and I'm getting hosed on those. So end of day, it looks like I'll be closing those. Very rarely, as a swing trader, do we close a position the very next day we open them, but that's okay. Everything matched up with what I wanted yesterday, and then today the market told me not today, hammy, and so I'm going to be closing those potentially end of day. So that's what I'm doing. Tactically short some Microsoft, a couple other names that we talked through during the Bear Tracks report last Thursday. Other than that, my hands are off. I'm waiting for better setups to appear. And to the short side, last thing I'm going to say before we call this, because I know everybody's thinking about taking shorts here, very rarely is buying into big down days short or new short positions a good idea. I'm telling you, and we have this conversation inside of TTI last week and this week today, that if you're buying puts into days that you're already down 1-2% on the indexes, any snapback rally you get whatsoever is going to eviscerate the premium on those puts instantly. Not only that, I'll give you a short setup that we were looking at. Shopify looks fantastic. We were looking at potentially getting short this, but it's already down 7% today. So on top of being exposed to a snapback rally, we're also paying top dollar for the contracts that we want. These are up 100% over what they were yesterday. So if this does snap back, we're paying more and we're losing more if it doesn't work out. Screw that. I'm looking for a snapback rally to get short as long as the market is still underneath those levels, those lines in the sand that we have. Okay, so that's what I got today for the Growth Leaders Report, just TGTX. And some general thoughts about the market, how we're looking to position ourselves tactically short, and then also what we're looking for in order to gain more confidence for the market. We got to get back up and over those lines in the sand, and as of right now, we're not. So sitting on our hands and waiting for better setups to appear. Okay, my name is Hamilton. I'm here at the Trading Initiative. If you like this type of content, please like and subscribe. Leave a comment below. Let me know what you think about TGTX, and let me know what you think about the market. Is this the top? Are we rolling over here? Let me know in the comments. If you're a part of TTI tonight, 7 p.m. Eastern Standard Time, we have our March market review. I implore that you go. It's going to be a little bit longer than usual, but we're going to be taking a step back, looking at monthly candlesticks and looking through everything that we possibly can in this market to make the best potential decisions we can, to make the most amount of money we can. Okay, see you guys tonight at 7 p.m. Eastern Standard Time. If you're not a member, link is in the description below. Check us out, and I'll see you tonight.